Thank you very much for inviting me on this stage. And I'm really honored to come down here in Sister Nivedita University. In fact, I stay very close to this place. I mean, my residence is not far off from this place. And it's hardly 10 minutes. I stay in Elita Garden Vista. I have a flat there. I stay there. Sometimes I stay in the different southern part of Calcutta as well. So I know this area well. And my daughter is also a part of an university which is very close to your place. She's in second year, going to be the third year in St. Xavier's University. So after a very inspiring session with Dr. Bhattacharya and Vinitji, so I was hearing very well how innovations, AI, ChatGPT, all these things will change the course of life maybe in the coming years. And you all are very young minds and a very reputed university. So all these young minds will think differently. All these young minds will take the action forward. But let me also ask you a few different things before I start my presentation. Do you think discipline is important in life? No, I would like to see, first of all of you are sitting here as students, and some of you might be, the teaching staff, professors. I would like to make this session very interactive. Until I make this session, I will try to make it from my side. Otherwise, the reason for which I am here is not purposeful. So do you think discipline is important in life? Yes or no? Okay. Do you think discipline restricts innovation? Do you think discipline restricts? What do you think? Please give me a very honest answer. Do you think discipline restricts innovation? Yes or no? Yes. No, yes. Raise of hands. Come on. I would like to hear from the students. Do you think discipline restricts innovation? So Dr. Bhattacharya started engineering, left engineering, pursued economics, statistics, mathematics. Do you think that was disciplined or not disciplined? So when he studied economics, was he disciplined? Of course, yes. Otherwise, he have not completed the subject as well. So let me start it through. How many of you, as Vinitji has asked the right question to you, would like to go for a startup or do something of your own? Okay. How many of you would like to do something of your own at the age of 35? Raise your hands. Breakfast nahi hua kya? So, how many of you would like to do something of your own at the age of 45? Or 40? Post 35? So, okay, fine. So let me see, what is this fire? What does education means? Education means passion, education means profession, education means business, and education means employment. At the same time, what does passion means? do something of your own. It might be a photography, it might be traveling. I want to, invent something. I want to explore something. And at the same time, what does profession means? When you pass out from this university or get into a professional course, you land up in doing some job, whether you are an architect, whether you are a doctor, whether you are an advocate. Some of you might do something else as well. But at the same time, you can get employed in marketing, sales, finance, business. It can be a startup, trade. It can be a family-owned. There are different sort. I want to make it very interactive. Ask me anything, stop wherever you want to like me to stop, and ask me anything. And it can be family-owned. It can be, see now the biggest question that comes. I want to do something of my own at the age of 35. I want to do something of my own. I want to leave my job. I want to, pursue my passion. But you need money, right? You need a capital, right? You need a financial reservoir who can give you with money. You can give a continuous flow of money, right? How do you create that? Have you ever thought, will ask for your parents that you give me, say, 50 lakh of money or a 30 lakh of money or a 40 lakh of money? Should you ask your parents? Yes or no? Yes or no? Should you ask your parents? Should you take a loan? Why they will give you why the bank will give you a loan? By virtue of your strength of the project. But the most important thing, if they think that they will not give you a loan, would you not start? Will your dreams not break? At the same time, you have to create something of your own. How many of you have bank accounts? Raise of hands. How many of you have bank accounts? Anybody who doesn't have a bank account? Both of you speaking to each other, you don't have a bank account? Anybody doesn't have a bank account? Okay. So all of you have a bank account, right? So what is saving and investment? Let me take you through certain things. So what is FIRE? Financial independence and retire early. See, how does finance and how does savings takes place? Please understand it. This is not a myth. This is not something which is very difficult. You have to understand it. You have to be interactive, and you have to ask me wherever you think that is not possible or that is shown, something which is out of reality. If you save 15,000 rupees per month for a period of 20, how many of you are finance students out here? How many of you are finance students out here? Only 2. Very good. How many of you are, from literature background? I mean, okay. So, and economics. So, and how many of you are for other? Which are the streams that you come from? History, geography, social sciences. How many of you are there from? Huh? First year? Okay. So now, 15,000 per month for a period of 25 years, 12% per annum is around 2.82 crores. This is simple. You have to save for 25 years of 15,000 rupees, and that will fetch you some money. This is. But what happened is that we lack discipline. What to do? You have to save for 25 years. Should I save for 25 years? What's the point? I'll get it after 25 years. We don't do that. We lack discipline. The same thing, the basic mantra of this kind of an education is that you need to begin early. The question is the power of compounding. Inflation. How many of you have heard the word inflation? Okay. How many of you have not heard the word inflation? Because I'm asking this, all of you are not from this, commerce or economics background, that's why. How many of you have not heard the word inflation? Okay. So inflation is clear to everybody? Thanks. Inflation. Now, before going to the word inflation, let me also clarify to you, inflation is not only price rise. Say, I have got 100 rupees from my father to buy a pen. And when I get 100 rupees from my father to buy a pen, I went to a shop. The pen cost me 100 rupees. Now, I put my thought process into it and say that, well, my father has given 100 rupees to me. I will not buy the pen this year. I'll keep it in a bank or in a deposit for 7.5%. After 1 year, it will be 107 rupee 50 paisa. I will buy the pen after 1 year. Eventually what happens, 7 rupee 50 paisa will be in my pocket. In addition to that, I will get a pen after 1 year, right? Is my thought process or your thought process is correct? Yes or no? Okay. After 1 year, I encashed that money, 107 rupee 50 paisa, and have gone back to that shop and told that, please give me the pen and take this 100 rupee for me. The gentleman told, no, I cannot offer you the 1 year before price. Now I have increased the price of the pen to 110 rupees. What happened? You had something in mind stating that 7 rupee 50 paisa would you save and tell your father that you have given me money of 100 rupees and 7 rupee 50 paisa you have kept, and again still you have got the pen. But that didn't work. Why? Because after 1 year the price of the pen has moved from 100 rupees to 110 rupees. So you went back to your father and say, give me 2.5 rupees more, because otherwise I'll not be able to buy the pen. Father told, I gave you 100 rupee before 1 year and I asked you to buy the pen. So he will say that, I have not done that. I thought that I should save the money for 1 year and save some money in my pocket. So this 2 rupee 50 paisa is the inflation. Is it clear to everybody? So before I wanted to, because you are from different diverse backgrounds, so before I wanted to go to this kind of a, jargon, I wanted to share my thought about it. Otherwise, you will not be able to relate certain things. So, investment of rupees 10,000 per month, if you start, see, if I start I have shown you the previous slide. ₹15,000 per month, 25 years, 12%, 2.8 crores. What we lack is discipline. Now let me go to the next slide. If I start from 25 at an age of 25 and go up to 60, investment of 10,000 rupees per month in an SIP at a rate of 9% give you 28 crores, at a rate of 12% give you 129 crores, but this is the place between 30 to 60 years if you keep the money. Now, if you see that, how many of you have heard the word Sensex? Who has heard the word Sensex? Who has not heard the word Sensex? So how many of you follow the stock markets? Very few. So, when I was working in one of the banks long back, in the year 2007, my friend told us that at the year 2007, the Sensex has crossed 10,000 points, and the stock market, it's a stock market index, it crossed Sensex's 10,000 points in 2007. I left that bank, and today in 2025, the Sensex is hovering at 84,000. So whoever who is investing the money in SIP today, and in case of your parents who are investing money in stock market or SIP today, may be aware of it. The Sensex is the measurement how the stock market has moved over a period of time. Please follow it very carefully. Is that the Sensex have moved 654 times return in the last 45 years of journey. It has started at the time when many of you are not born in the year 1979, and till today in the 1st of July 2025, how it has moved up. Is that today, if somebody would have invested 1 lakh rupee in the year 1979, he would have had 6.54 crores today with a compounding annual general rate of 15.01%, CAGR of 15.01%. Now, all these events have happened during this time. Some of you might be knowing it, some of you might not be knowing it. What has not happened? You might have known about the coronavirus, the novel coronavirus, which has happened 3 to 4 years back. But during this point of time, there has a lot of events happened which have created an economic turmoil throughout the country, not only in India, but globally. Fiscal deficit has happened, balance of payments crisis in 1990 has happened, there has been a stock market crash in 1992, political uncertainty, dot-com bubble, then global financial crisis in 2009. Everything has happened. Why I am trying to explain you is that there has been a lot of disturbances in the market over the last 45 years of the journey, and the journey of the market has not been so smooth. As a result of which, people at the time when the market there is a correction of 8,000, 10,000 points, and there is an uncertainty, often people think that I should stop my investments, I should not do my investments, I should stop my SIP. But let me reassure you from this file, let me reassure you from this slide that in this 45 years journey with a lot of uncertainty, still this is the kind of growth that we get in the equity market. That's why this slide is very pertinent, and that's why this slide is very important. Now, what is the cost of delay means if we start late? Say if you start now at the age of 23, there will be a kind of return that you will get. But if you start late, probably later, what will be the cost of delay mean to you? Say, all of us will have to retire. When I started at the year 29, at the age of 22, when I started my first job at the age of 22, now I am crossed my 50s. So I also would have also thought that, retirement is far away. I shouldn't think about that now. But there will be a point of time, somebody will have to build up a retirement corpus. Some of your parents who have also superannuated, they are also living on the retirement corpus or on a pension. So if you want to build up a retirement corpus at 1.5 crores at the age of 60 years with a return of 12.12%, now what will happen? If you start an SIP, systematic investment plan, at 25 years of age, the money that is needed is 2,309 rupees. The moment you start at 30 years of age, it almost doubles, 4,200, 35 years, 7,900. Likewise, 40 and 45 years, the money goes up. So for building up this same corpus at the age of 60 years of retirement, how your principal investment changes if you start late is a very, very important criteria, and that's why it is more important to start very early in life. Delay of every 5 years, almost doubles your SIP amount requirement to reach the same goal. If you start now and if you start 5 years later. Now, what is the cost of delay means? See, there are 3 people. One is Ramesh. I'll give you another 2 examples. He started at the age of 25 years with a 15,000 rupees, and the return expectation is only 10%, though investment at the age of 60, the money goes for 35 years. The total amount of investment is 63 lakhs, and the expected rate of return is 9.6 crores. Now, there's a gentleman whose name is Suresh. He starts enjoying his life to 25 to 45. He says that I'll spend on myself, I'll spend on touring, I'll spend on a lot of other things, I'll enjoy life. I'll start investing only when I'm on 40, 45. As a result of which, what happened? His investment amount is 27 lakhs, and he gets a return of only 75 lakhs. Instead of investing 63 lakh over a period of 25 years, he has invested 27 lakhs. Over a period of 35 years, he has invested 27 lakhs, or 15 years, with a return at close to 75 lakh, which is a loss of 8.9 crores. And there's another gentleman, Suresh, who told, fine, say, both of you are friends, right? So he told that, fine, you started at the age of 25, you have invested with 15,000 rupees, I'll start at the age of 45, I'll double the investment, I'll increase that also. Instead of 15,000 rupees, I'll give 35,000 rupees. This is more than double. Now what happens? Could you recover? The same thing. Instead of 74.9 lakhs, it goes to 1.75 crores. Then also, from 9.6 crores in the first example, in the first illustration, he's falling short of 7.8 crores. What does that mean? What it means, I'll come to that. Cost of delay for Suresh is around 8 to 9 crores because he has not started early. Because the entire money which you are giving over a long period of time in the market for a period of only 35 years is accumulating wealth for you. If you delay by 10 years, 15 years or 20 years, it will disturb your wealth creation process and have a negative impact on your retirement corpus. There's a frame, say Alicia starts at the age, SIP start age at 20, SIP amount 5,000 rupees, corpus at 46 lakhs. Sharan, the same thing, 25 years, 5,000 rupee. His corpus is 24 lakhs, delay of 5 years, almost half corpus. By 30 rupees, the SIP amount of 10,000 rupee increases the amount. But then also, it stops at 22.4 lakhs, delay of 10 years, despite double the Alicia's SIP amount, less than half of Alicia. And Ishita, who starts at 20,000 rupees, say, he starts at the age of 20. So 20 you might not start. I mean, somebody will start at 22, somebody will start at 23. This is an illustrative example which gives you, this is totally an illustrative example which will give you, we have taken the assumed rate of return 12%, that 5,000 rupees with an annual increase of 1,000 rupees. So if you are in a job or if you are in a business, what do you expect? Whatever is your money that you have earned this year, next year probably you will earn some more because there will be some increase in salary, increase in business income, whatever it is. So this we call technically a step up. What does that mean? With my increase in salary, I have also stepped up my, what did I step up? What did I step up? I stepped up my investment. I stepped up my savings, right? A portion I took out and I thought that I should increase my savings. Is it clear to everybody? Is it clear? So 5,000 rupees had increased to another annual 1,000 rupee. He gets a crore. So what do you think today that saving money to the tune of crores, what do you think today saving money to a big amount is not difficult provided you are disciplined as well as you are innovative. What is discipline and what is innovation? The discipline means you tend to invest for a very long term. You don't break your investments. That's discipline. And innovation means the step up of 1,000 rupees per year. If you want to do more, you can do more. This is part of compounding. So as you know, compound interest is the 8th wonder of the world. He who understands it, earns it. He doesn't, pays it. By Einstein. Let's play a game. I want to play with all of you. Just read it out. Somebody can read it out for me. Madam? Come. Come on the stage. Come, what is written?
Parents for pocket money start.
Can she use this mic? Yeah.
Ask parents for pocket money start with ₹1 and double it daily for a month.
Can you ask your parents that I will, on the day 1, I will take 1 rupee. Day 2, how much you will take? 2 rupee.
2 rupees.
Day 3?
6.
Day 3.
6, sir. Double.
Day 3.
4.
4, na? Sure? Day 4? Day 5? So on the 31st day, how much you will take? On the 31st day, how much you will take? Let's play a game. So you like to, so day 1, 1 rupiya se chalega. What's your name?
Srishti Banerjee, sir.
Srishti Banerjee. Srishti, on day 1, you start taking 1 rupee. Day 2, 4. So ask your mother, 1 rupee, give me 1 rupee. They'll be very comfortable giving you, right? Day 2, she will be very comfortable. Day 2, agar 2 rupees, 4 rupees, 8 rupees, 16 rupees, they'll be very comfortable to give you, right? Yes or no?
Yes, sir.
Day 5 में कितना होगा? Everybody, who will be the first one? Day 5 में कितना होगा? हाँ? Day 5 में 16. Day 6 में? Day 7 में? So how much you will get at 31 on the 31st day in a month? $10 lakhs? Yes or no? 1 crore? 10 crores? 20 crores? So now, let me see. 30 crores or more. So day 31, you are getting 100, and thank you, ma'am. Day 31, you are getting 107 crores. This is the power of compounding. Real life, it doesn't happen that way. Just to give an illustration, we have given it. If you are asking for your parents that 1 rupee to 2 rupee to 4 rupee to 8 rupee to 16 rupee, that doesn't happen. But at the same time, this is the power of compounding. This is the illustration. So, the moment, if you stay invested for 15 years, 20 years, 25 years or 30 years, your money compounds in this way. The moment you stay invested for 15 years, 20 years, 30 years, 25 years, to build up your retirement corpus, your money compounds in this way, the way you'd like to get your money from your parents. This is that game of Akbar and Birbal, where Birbal have told Akbar that if you lose in the game of chess, all the 64 blocks that you have, the first one should be with 1 gold coin, the second one will be with 2, third one will be with 4, 8, 16. So what would happen? How much you would have got? Again, this is a power of compounding. I wanted to stress upon this. SIP is a format of power of compounding, which is an 8th wonder of the world. This is a very important slide for the children to understand and the people like you would start investing. Often, we discuss about the rate of interest. What is the rate of interest? Often we ask that I will do a fixed deposits or I will do an investment. What is the rate of interest that, am I correct, Dr. Bhattacharya? Who differs with me? Often is the rate of interest that we ask. Anybody to differ? Yes or no? Now, the return is factor of two things. One plus rate of return into time. There are two factors which will guide and which will prosper your investment. One is how long you stay, and the second thing is the rate of return. Both are very important factors, and to me the most important factor is how long you stay. How long you stay invested. It is 1 plus r to the power n. We always think, with the time, we always think about the rate of interest, but the most important component of this formula is the time, that how long you stay in the market. That's why I'll go back to the previous illustration that 1 lakh has grown to 6.54 crores with 15.01% CAGR, despite of the factor that so many things have happened in the market from 1979 to 2025. Every possible thing that has happened in the market, and the market has gone through turmoil. People have started thinking that whether should we take out entire money out in the market, but people have prospered. And that's why, as we think, the India produces one of the most numbers of the millionaires and billionaires of the world. Inflation. How many of you have seen this, these currencies? I have seen. But how many of you have seen these currencies? Does this currency work? Does this currency work? Anybody thinks that this currency work? Why it doesn't work? When I was a boy, when I used to go to school, my mother used to give me 20-25 rupees. Of 50 paisa was a big money at that point of time. Even 1 rupee was a big money at that point of time. But why didn't it work? Because inflation has faded it away. How does the daily usage look? Loaf of bread, 1 liter milk, 1 liter petrol, and higher education. 2000 versus 2030, assuming my inflation rate of 6% only. ₹10, 51 rupees, 25 rupees, liter of milk, 129, 28 rupees, 265 rupees, and 3 lakhs to 47 lakhs. Is this true or is this untrue? I would expect some sort of a sister Nivedita University. I also come from North Calcutta. There's a sister Nivedita school in Bazaar also. I used to expect some sort of response from the students so that we can make it more interactive. So do you think this is true or untrue? True, right? It relates to your normal life. Have you seen this? How many of you have seen this? How did it get replaced? TV with a simple now flat TV on the wall. Would anybody would like to buy the first one? No, I don't think so. Telephone, one thing, camera and landline has merged into one. Innovation. But somebody was disciplined at that point of time to innovate it. An AC. This is the inflation of lifestyle. AC is a very common factor these days, which was not 25-30 years back. What we call is an inflation in lifestyle, right? Material aspirations. I can see the smile in all the ladies' face. Right? Louis Vuitton bag. Who would like to buy a Louis Vuitton bag or like to get a gift? Raise your hands. Who would like to buy? You don't? You don't? Louis Vuitton bag, right? Gentlemen, Rolex watch. Versace would not like to buy. But all you can do, plus please don't do at the cost of delay of your investments or at the cost of your investments. If you chase your luxury dreams or manage your lifestyle inflation without saving enough, without putting money or not starting early, then you continue to become poor. Because, as I told, I have given you the illustration that somebody starts at 20 years of age, somebody starts at 35 years of age or 40 years of age. He enjoys life, nothing wrong in it. Nobody is asking you to enjoy life. Please do that. But at the same time, not at the cost of your savings and investment. If you don't start early, if you don't start on time, the only thing that will happen, you will remain, you will not be able to accumulate the wealth that you should have done at the time to run your family, to maintain your retirement corpus. So, we bought the first iPhone at the value of rupees 25,000 in the year. See what happened. 2007, we bought our iPhone at the rate of 25,000 rupees. And today the value is 500 rupees. If the same, in place of that same iPhone bought at 25,000 rupees, would have invested in Apple shares at rupees $500 investment at $4 per share, we would have got 125 shares. Today, today's value of this iPhone is rupees 500, but it's that share which we have got invested at that point of time, the today's value is close to $31,250, which is 63 times in terms of an USD or 112 times in terms of an INR. Same thing, put the money in Apple shares instead of buying the iPhone. The same thing, price of Maruti is 3 lakh and the today's value is 15,000. Had the same 3 lakh would have been kept in Maruti shares at that point of time, you could have bought Maruti stock, anybody could have done. Then the value of that 3 lakh has become 3.08 crores today, which you can buy a Rolls Royce. So, financial index, so what is an SIP? Systematic investment plan, SIP, and begin early, in interest of time, begin early, power of compounding, and lifestyle inflation. This is the most important thing. With this, these are the key takeaways. Beat inflation, invest in growth assets, start investing rupees 500 a month, invest early to grow more, idle money earns nothing, invest it, achieve your goals with a systematic investment plan with SIP, liquidity matters, easy to sell, easy to use. The power of compounding is the 8th wonder of the world. With this, I come to the end of the presentation. Any questions, I would like to take it. Is it over? Thank you so much for your patient hearing. I hope you liked it. Thank you so much. So.